Hello and welcome to another video update. Today we want to take a look at JD.com, one of China's largest e-commerce and logistics companies, often compared to Amazon, but with a major difference. JD owns and operates its entire logistics network. That means the company controls everything from warehousing and distribution to last mile delivery. Basically, it gives it a competitive edge in speed, reliability, and customer experience. The stock we analyze here is the ADR listed one on NASDAQ, which represents shares of the Hong Kong listed parent company. ADRs, American Depository Receipts, they are called. They make it easier for global investors to own exposure to JD.com in this case, without directly trading on Chinese exchanges. But they still fall under China's variable interest entity structure, which is standard for most Chinese tech listings. What we want to do, we'll take a look at the Elliott wave count, and then we'll take a look at the fundamentals as well, just some key financial metrics. I want to give you my opinion, and we'll take a look at the key metrics. Looking at the structure here, I mean, the current thesis is that a wave 2 or a B wave bottomed in August. In other words, a substantial low might be in. We started a rally in January 2024. It's only a 3-wave rally, and the market topped here. I started to cover JDs at some point down here. For those of you who are wondering where and when, it is one of these stocks that regularly gets requested in our stocks membership. You can access that via the Patreon link in the description and the comment section. In the higher tiers above basic, probably you have access to hundreds of stocks per week, and JD is regularly requested. In the professional tier, you can request 2 stocks per week, and again, it's regularly requested, and therefore I cover it regularly, just not here on YouTube, because you can't cover them all, right? It's just too many. But yeah, so it is one that I find quite interesting. What we saw here was a 1-2 setup. This wave 2 might have bottomed in August. This is another 1-2 setup that formed. That's the current thesis. I switched to extended hours, so you can see that this wave 2 nearly invalidated, or this dip on the 10th of October nearly invalidated the 1-2 setup, probably pre-market, I guess. No, post-market. And then from there, we had another 1-2 setup. So, I mean, I prefer, we did not invalidate this structure, right? It's not invalidated. But I prefer this low is in now because it was already deep. If we get another low, then we'll likely invalidate the first 1-2 pattern, which developed from the August lows. But for now, it's promising because we start to grind higher here. And the next resistance is around $37. And if this really is a third wave up, it should get at least, I'd say, to $38.69. A third wave should get to the 123.6 extension, ideally higher. I mean, I would prefer based on the proportions here of the move, because remember, in a wave 4, the price should not break into the wave 1 price region. So we want the third wave to be healthy. And I think for this to be a sustained trend, something more substantial, ideally this third wave gets to 39.78 at least, but we have to take it level by level. Remember, we're dealing with a diagonal pattern. So again, this is an A wave in a third wave to the upside. That is because the initial move up is also a 3-wave move. Wave 1, then we had the wave 2, and the third wave therefore also needs to be a 3-wave move. All right, that's not bearish. It just means it's a bit choppy. It's a bumpy ride. And ideally, as I said, the low is in. If it's not, then it can always reset this B wave or wave 2, which bottomed in August, reset it, extend it. In that case, the lower support area will be relevant again, but actually, ideally, the low is in. As I said, 36.96 is next resistance. Ideally, we get there and then grind a little higher, maybe get another 4-5 pattern, and then we can add support for wave B. Remember, A waves can also be 3 waves. So it's going to be a bumpy ride. 1-2 setups are in these cases still the best setups, not because they have to hold, but because they give us very, very clear parameters. Now let's also break down the numbers. This gives you a good idea of where we stand in the cycle. If you're wondering where you can trade JD, it is, for example, available on XTB, which is the partner broker that we use as well to build our own portfolio here. We started to do that in October. You can trade JD, for example, here as the ADR, which is listed in the US. You can also trade the CFD. You can, let's click on it. You can select it here, and then on XTB, you can also look at the information about the instrument, right? So, for example, you can check, do they pay dividends? So they do even pay a dividend. And then you can look at the key financials. And so we want to talk a little bit about those. That's very valuable that you can access all of this here. Plus, they also have news. They have a chart analysis tool, which is very similar to TradingView. For example, I mean, TradingView costs money. Here, obviously, it's free. And you can use most functions as well, just like on TradingView, for example. That's very valuable. But yeah, I already mentioned not what XTB is, what JD is. But let's talk about some of the key metrics here. So the first key metric we want to look at is earnings per share. That's around 26.68. That should be CNY, which is roughly $3.7. It remains consistently profitable, which is rare in the Chinese e-commerce space. The profitability comes from efficiency and scale in logistics rather than from advertising like Alibaba, for example. We have ROE 17.3%. It's very strong for a retail platform. It shows JD is using shareholder capital effectively and generating solid returns, an indicator of operational excellence. Then we've got ROIC, which is nearly 13%. It confirms that JD's logistics network, while it's expensive to build, now generates healthy returns as well. Anything above 10% is usually considered strong for a business with such heavy infrastructure. Dividend yield, nearly 3%. JD recently started paying a dividend, which signals, financial maturity and cash flow stability. That's unusual for a Chinese tech company. It shows JD is past its high growth, cash burning phase, though, which is good. Price to earnings is 9.5, extremely low for a profitable tech stock. The market is pricing in geopolitical and macro risks here, I think, rather than business weakness. So fundamentally, JD looks undervalued here. Price to sales, 0.29. For every dollar of revenue, the market values JD at just $0.29. So it's an incredibly cheap valuation for an established profitable company. EV to EBITDA 4.77 confirms, in my view, the same story. JD trades at roughly half the valuation of comparable Western peers. It's a sign that investors still heavily discount China exposure. And then operating margin, thin margins are typical for large e-commerce players, 2.4%, quite low. But JD has managed to stay profitable even during China's consumer slowdown. So that's a sign of strength. For me, JD, it tells quite a clear story. JD is profitable, efficient, and undervalued, but sentiment toward Chinese equities keeps prices depressed. The fundamentals show strength and stability, and yet the valuation implies distress. Again, there are geopolitical factors here as well that play a role. Again, that's probably not necessarily a reflection of JD's operations. It's more like market psychology, and that is exactly what we're looking for in a wave 2. So I just showed you we might have completed that wave 2 already, but it's typically where bearishness, where for example stocks get, let's say, the market views stocks in a wave 2 typically quite negative, and that shows the undervaluation here as well, right? It's not interesting at the moment, but on paper, JD's metrics are stronger than most Western retail platforms at a fraction of the price. So it's a cash generating, asset heavy e-commerce leader with one of the best logistics systems in Asia. Stock trades at PE below 10, and that makes it one of the most undervalued large cap e-commerce companies globally. But it's not without risk, okay? So, China stocks, there is some risk there. And, but the setup is there. There's an Elliott wave setup, which is bullish, and the stock is undervalued. And overall, metrics seem fine. So I think it is an interesting one. but just be aware of the risk. But you have invalidation points and everything, so check it out if you're interested. Also, if you're interested to check out XTB, they currently have a promotion running where you can qualify for a free stock. It depends where you live. For example, XTB is not available in the US. And for example, in the UK, you would get a free Rolls-Royce share, but just make sure that you understand if you can qualify here. For more information, please click here. So there's a link in the comment section. I wish you a great day. Hopefully that added some value. Thanks so much. Bye-bye.